How to get a business loan with no money. Once the financials of your company are stronger, you'll probably be eligible for better terms, though it won't always make sense to wait. Here are some choices you might have if you need a small company loan right now but don't have any money or revenue. Lack of funds, little income, or no revenue for businesses. With little money, it's unlikely that you'll be able to get an SBA loan or a conventional term loan. But even without income or cash in the bank, you might be able to access these additional forms of funding. Commercial credit cards. If you use a business credit card responsibly, it can raise your credit score and make you more eligible for future company loans, which, in large part, means paying your credit card bills in full and on time every month. Credit card companies care about cash flow, but many are more interested in your own creditworthiness. To be eligible for most cards, you'll probably need good personal credit, a FICO score of 690 or higher. For startups with no income, business credit cards might be very helpful. An equipment loan is underwritten slightly differently than a conventional term loan. Up to 100% of the cost of an item of equipment is fronted by the lender, who uses that item as collateral. Because of this, lenders are equally as concerned with the equipment's value as they are with the company's financial health. The conditions of an equipment loan are determined by your business and personal credit histories, length of time in operation, and how well the equipment fits into your overall business plan. Cash flow doesn't play a big role. Finance for invoices. Unpaid invoices from a company are used as security in invoice financing. Companies that provide invoice financing will advance you a portion of your overdue invoices in return. Companies that finance bills are just as concerned with the financial health of the company as they are with the value of the invoices. Therefore, it's possible that enterprises with less cash flow will have an easier time getting this kind of loan. Microloans. Microloans are smaller loans, usually up to $50,000 or less, and the majority of lenders are charitable and nonprofit institutions. These loans frequently have low interest rates and are given to companies in underserved areas. How to obtain a small business loan in the absence of funds or income. Businesses require financing for a variety of reasons, but all lenders want you to be able to pay back their loan. There are still options for getting a company loan if you don't have enough revenue to convince a lender that this will happen. Analyze your resources. Lenders face a risk each time they make a loan. They seek proof that a borrower is capable of paying off the obligation completely. Lenders frequently base their decision on your ability to generate income. If you aren't, think about what other advantages you can provide a lender, such collateral or your own credit, to make you seem like a safer choice. Find out what a lender requires. Before even considering issuing a loan, some lenders demand that borrowers have a specific quantity of money in their business bank accounts. However, if applicants match certain criteria or have excellent personal creditworthiness, other lenders are a little more understanding of cash flow. Before applying, make sure you understand what a lender is seeking. Ascertain your repayment capacity. Low bank balances are a major consideration when determining risk. The fact that lenders prefer automated withdrawals is a significant factor in this. A lender could be concerned about your capacity to make full loan payments on schedule if your loan calls for weekly payments of $400 but you never have more than $1,000 in your account. You should be, too. Recognize your own risks. Terms of loans reflect risk. Risky loans may have higher interest rates, more frequent payments, and shorter payback terms. You can end up having to take out extra debt to cover your current obligations if you're unsure that you'll be able to repay a loan without having money in the bank. It can be tough to escape the debt cycle. With no money, should you apply for a business loan? In the following situations, applying for a company loan even with little to no income may make sense. You're awaiting payment. Many organizations, nearly all B2B firms, including those in the construction, trucking, consultancy, etc., operate on a contract basis, and payment is occasionally delayed for several weeks or even months after services are provided. These organizations, however, do not have the luxury of delaying the commencement of the subsequent project, work, or contract because doing so would result in costs. At that point, cash flow issues start to arise, at which point financing or invoice factoring may make sense. For growth, you need resources. A growing business cannot be supported by startup-sized resources. Small business loans are crucial since larger enterprises require larger sums of money. They could assist with stockpiling, hiring extra personnel, or opening new locations. Consider options like microloans and business credit cards to pump some money into your company if you're a startup with no sales but a great financial projection. You have a mix of personal and professional finances. Separating personal and corporate finances is challenging. It can be challenging to consider your personal and business cash flows as separate even if they are. It's all too simple to take out too much money from your personal account to cover a business bill or other ostensibly one-time obligations. This might lead to the dreaded non-sufficient money error for your personal account and indicate that you need to raise special company funding. What expenses can I reduce without substantially compromising my ability to do what I do best? Your company's ability to save money by adopting a few operational adjustments can astound you. Create a clear savings objective as well, and change your budget to reflect it. Open a second business checking account to which you periodically make automatic transfers of money. The lending world and your personal world will be simpler to manage once your company has a cushion of cash.